All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for March 9th, 2026. And we are recording this at 5 p.m. Eastern Time, and this is episode number 518. My name's David Cosmeter. I'm the creator of TimingResearch.com, and this is Women's Week on Timing Research. This is, of course, International Women's Day, Women's History Month, and tradition we have here of doing a women teach trading and investing event, and that was Anka Metcalf's idea. She's my partner on the Synergy Trader series that we host together, and so it's this will be our eighth annual event, and so Anka is here to moderate. Also, I have arranged for an expert panel of Alaina Nicole of investingbay.com and Carley Garner of decarleytrading.com. So we're going to talk about the markets today. And then starting tomorrow is our big Women Teach Trading event, and that'll be from 10 a.m. Eastern until 5 p.m. Eastern Time on Tuesday, Wednesday, and Thursday on TimingResearch.com. So Anka is here to moderate, and I'm going to turn it over to her.
All right. Thank you so much, David, for putting this together. And what an exciting week this is for the markets. And of course, in terms of education, because we are hosting one of the biggest events, biggest trading events, especially for women, especially, literacy, financial literacy is so important. So with us tonight, we have Carley and Alaina, and I just think that right now we have been knowing each other forever because we have been together through so many events. And I'm really happy that you guys are here. And I am going to start with Carley. Just tell us a little bit about yourself, what you do, so everybody can get to know you a little bit before the big event that starts tomorrow.
Sure. Thank you for having me. And you're right. We go way back. I can't believe you've been doing this for 8 years because
I
doesn't seem
know.
like 8 years. That's a long time. Good for you. Uh, so uh, my name is Carley Garner. I am a futures and options broker. I run a boutique brokerage shop. I'm located in Las Vegas, Nevada, but we have clients all over the world. That's the great thing about futures brokering is we can accept clients from anywhere. And we have them from, I mean, literally anywhere. So uh, on a daily basis, we're basically our job is to make sure that our clients' platforms are working correctly, that they have all the information they need, and I do also give them some guidance, trading guidance, newsletters, things like that. But we're a brokerage shop, not unlike some of the bigger names that most people are probably trading with, but we give a little bit extra service for uh, probably about the same rate or maybe a similar rate. So we're a little more customer oriented, but we're a smaller shop. So that's our spiel.
Awesome. Thanks so much, Carley. And Alaina, tell us a little bit about yourself and what you do.
Yeah, thank you so much for having me. So I'm Elena. I am predominantly a day trader. I love to scalp. And I also am really big on the trading psychology stuff. And so I wrote a book last year on the science that basically what happens in our brains when we are trading. And so I really like to help people with like behavior modification and just getting those habits down because I know trading can bring out the worst in people sometimes. So I just try to help people learn how to calm their nervous system so they can function and manage their accounts.
This is amazing. Where can we find your book?
So it's on Amazon. It's called Trade Brain. And I literally wanted to just, I really was like, what happens? What would it look like if I was looking at a brain and like it was taking a trade? Because, people like they jump into the market and their trading plan totally goes out the window. And what actually happens is we lose access to the part of our brain that makes a plan, right? So it's really interesting. But yeah, I just went down the rabbit hole and it's been a lot of fun. It's been really cool to see people, make the changes.
This is so fascinating. I think I'm going to buy your book.
Oh, thank you.
All right. And my name is Anka Metcalf. I'm the CEO and founder of TradeOutloud.com, which is a trading education company that is specialized in educating individuals how to day trade, swing trade, and invest. I day trade the power hour. I day trade futures and I swing trade and invest in the stock market, ETFs, etc. I've been doing this professionally for over 25 years. And prior to this, I'm coming with 10 plus years in investment banking. All right. So now, let's see what's going on with the market. So the first question, and I know this is going to sound very weird because we are trading in a very difficult market environment where we don't know where the market is going to move from 1 hour to the next, let alone in a couple of days or a few days into the end of the week. But here is the question, and I think I'm going to add a little disclaimer if that's okay with you, David. I'm going to ask this. Where do you think the S&P will close this week, whether higher, lower, or unchanged? And the little disclaimer is if these were normal market environments. Like technically speaking, like from the technical standpoint. And if you guys like, I could just, and because we're gonna be talking about this, I'm just gonna take all these notations so we can have like nice clean charts. If you guys want to use your charts, just please feel free. All you have to do is just screen share your chart if you want to discuss on your chart. So Carley, I'm gonna start with you. Where do you think the S&P is going to close this week? Just like, don't explain why now,
Yeah.
just,
Okay.
and I think like from the technical standpoint, not everything that's going on in the world right
Right.
now.
Well, as you mentioned, there's a lot going on. And so with that said, I literally have zero ideas because anything, it could change so quickly. But if
Yeah.
I'm just going off the chart, my chart's a little different than yours, but I do see that red line that you have at the bottom,
Mhm.
which is, I'm not some sort of
This is
moving
the 200 SMA.
200. Okay. I have a trend line that comes in right around exactly that. We did it in the futures market. We actually popped below it overnight. And as everybody knows, we recovered and now we're trading above it. So the fact that we broke that support and are now trading above it on a weekly chart, on my weekly chart, it's basically the same general level that yours comes in. So it's about 6,600, 6,650 in the S&P. Because we've closed above that, I would say the bulls have a little bit of an edge here and we probably bounce a little higher. The top end of the little trading range that we've been on a weekly basis on my chart comes in around 7,150. So I wouldn't be shocked to see something up in the 7,000, maybe a little higher range. But again, things could change so quickly. But chart wise, that's what looks like the most likely scenario.
Absolutely. And I agree with you. We have no idea where the price is going to go. If it wasn't for technical analysis, things would be very complicated, I think, would be so.
Yeah.
Yeah, technical analysis, just makes everything a little bit easier for us. Alaina, where do you see the S&P close this week?
Yeah, like she said, it's really hard to say, but even like without like the war stuff, just the economic calendar is insane this week too. But I would probably say today was really aggressive. Like the buyers came back really aggressively, so I'm thinking they'll probably try to reclaim 7,000, and that's just from the fact that we've been in this range, like bouncing back and forth. So yeah, I wouldn't be surprised to see them work their way back up there.
Okay, I absolutely agree, 100% agree with you guys. First of all, what Carly said, like we have no idea due to the circumstances. We have, again, some data that is coming out that we're not even going to discuss because I think that's going to take second place to whatever is going on right now. And I also see the market higher, literally, because this is such a dominant trend. This is like, regardless of what time frame you look at it. And this was just a shock. It was just, in my perspective, it was just a tape bomb that took the price lower. We saw the Dow like literally more than 1,000 points lower last night. And I think one of the things that we actually forget is the fact that technicals play such an important role and that we have tons of algorithms that are trading the market, and algos do not know whether there is a war in Iran or if there is like a hurricane somewhere else. The market still respects up to a point, except for the tape bombs, some critical levels in the market. But all in all, I think that the S&P is going to close higher. And like I said, once we get above, and I have the 50 SMA, which is this green line right here. And I think that once we have the price above the 50 SMA, I think that buyers are going to come back with conviction. And that's my take on it. So we're going to move to the next question. What is the single biggest risk in the market right now? Do you guys think is geopolitics, inflation, interest rates? We have FOMC next week. Or do you think it's something else? Carley, do you want to take this?
I personally think it's the spike in oil prices. I know oil gave a whole bunch of that back today, and I'm not bullish oil. I haven't been bullish oil this whole time. I think this is just literally there's a lot of weird things going on here. Obviously, market got surprised, but I think there's a lot of like cult-like trading, a lot of hot money that comes into commodity ETFs. We saw it in gold and silver. Now we're seeing it rotate to oil, and I'm not a big fan of it, to be honest. These commodity ETFs, I think, are really complicating price discovery. So with that said, the reason I say that, even though I think oil, we could very easily retest last night's highs. I don't know. It's hard. It's super hard to say because it depends on things we can't control or predict. But anytime oil has moved this far, this fast, it tends to break things. And so that's what I worry about is I think that's the biggest risk is if there's some additional oil issue, like, maybe we go and even if we retake half of what we lost today, that still puts us over $100 a barrel. And that might be enough to just change the hearts and minds of market participants. And so I think we have to be really careful. Oil moved this quickly in 2022. 2011 and 2008. Those are the only 3 times during my career that we've seen oil do that. And in each of those occasions, the stock market had a pretty good correction. In fact, I think on average 20% or higher. So again, I think that's the risk. We'll have to just monitor. Maybe this time is different because we have to, the people in DC, our leaders are a little bit, they think outside of the box. So maybe they have some sort of grand plan in mind to make this time to be different. But usually that doesn't work out. Usually it's never different. It's usually always the same. So be very, very careful and just be mindful of the risks. This probably isn't the time to slam on the gas, even though all 3 of us admitted market's probably going up this week. Complacency will kill, and eventually it's going to sneak up on us. So just be careful.
Oh, I absolutely agree. Yes. And just remember when oil went negative here,
Yes,
this was crazy.
it was crazy.
It was crazy. What a time to be alive and trade, right?
Exactly right. And I mentioned that every time oil spiked, it brought the stock market down. But actually, if you look at any spike on the downside, it had the same event. Like obviously 2020. There's good reasons for these spikes in market reactions. So sometimes it's not necessarily oil causing the stock market to correct. Maybe it's some event that caused oil to move and the stock market. But they always explode in volatility at the same time. So just be aware of that.
Exactly. And I was looking at the volume here in 2020. Well, I mean, this was record volume, this April 2020, record volume in oil. This was crazy
Yeah,
right here.
it sure was. And I am not bullish. Haven't been bullish oil. I think this is a temporary, just anyway, whatever's happening is happening.
Yeah,
But with that
yeah.
said, last night, I had flashbacks. I had PTSD from 2020 when, and nobody could have expected oil to go negative. So I was just thinking to myself, if oil repeated 2020, but on the reverse side, maybe it's not so crazy to start thinking 150, 120, or I'm sorry, 200. I don't think those would be rational moves if they happen, but nobody saw 2020 coming either. So we have to really be on our toes.
Oh, absolutely. It's just insane what has happened right now. It's volatility and the spread was so wide last
Yeah.
night. It was just wow. Like when the markets are super fast like this, I have the tendency to sit back and observe, like I am not getting close to it. And I used to love to trade oil, but lately I have been like staying away. Even it was literally in this chart I don't have to be in that trade and put on
No,
risk.
I
Yeah.
don't blame you. Luckily, I had suggested my clients buy cheap puts, so we had limited
Mhm.
risk. It can go up to whatever, and it's not hurting. Most of our clients were fine, but it's still hard to watch because I just hate to see markets behave like that. There's really no reason, no reason for them to behave like that. So,
No.
doesn't make me feel warm and fuzzy as a commodity broker.
No, no, I bet everybody, I mean, I bet there are a lot of margin calls and I bet there
Yeah,
are, yeah, it's just
no fun.
sad.
It's no fun. It
Yeah,
is sad.
not
It's
fun.
sad. It is
Yeah,
sad.
not fun to get
Nope.
into this crazy market.
No.
Alaina, what do you think like the biggest risk is right now? Do you think it's inflation, geopolitics, interest rates, or something else? FOMC next week.
Yeah, I'm kind of torn. Like I do agree that oil and just the whole war scenario was just kind of out of left field, but I also think, and this is probably like an unpopular opinion, but I think AI is still a huge it's got, there is upside. Like a lot of this AI stuff has been priced into our big tech and our mega caps, things like that. But I also think like the unemployment side of it, it has the potential to really disrupt that. Oil and all this that's happening is inflationary. So it kind of like creates this weird environment where it's like the Fed they're like caught between labor and inflation. And so I don't know. It's really hard to say the biggest risk. But I look at companies like Oracle and their debt to income right now, and it's crazy, and it's like they're really leveraged in this AI and the infrastructure, and it's like, okay, when is the payoff gonna happen? Is it gonna be, what's that gonna look like? So I don't know. I think AI right now, a lot of these stocks have gone up. Especially like the big tech stocks, like your Max 7, minus Apple. But a lot of them have really priced in a huge return on the AI, and I'm just wondering what that timeline looks like.
I totally agree, especially Nvidia that reported earnings not long ago.
Hmm.
It's still in the same massive range. Like it
Yeah.
hasn't, yeah, and it's just sitting there and is just accumulating so much energy and just, we just need more buyers or sellers in order to start moving that. So I don't think anybody's selling in Nvidia because they think of long term, but
Uh-huh.
I think that, yeah, so earnings were great for Nvidia, selling like never before. So things are looking good, and yet the stock is still not moving. Still
Yeah,
not moving.
those valuations are pretty high. A lot of these
Yeah.
valuations are really high.
I agree. And I think from my perspective, I think geopolitical aspect right now is so strong and the market likes certainty. The market likes to move with confidence. And right now, everybody's, whether it's AI, like Elena said, or whether it is the geopolitical context or the data that we're expecting this week, next week, is pretty much spooking a lot of traders. And Carly, what do you think? Is it better to be a day trader right now or on the part of swing trading or, investor? Like and
Right.
I agree, like if we were investors right now, we would probably sit on our hands because we're looking at a much higher time frame. But
Right.
is it better to day trade or swing trade right now?
I mean, I would say like if you're trying to play the setup that we just talked about where we held support and now it looks like we might have a couple good days of bouncing, I would say play it out with a very short term, like as a short term speculation. And maybe it might even be as easy as just buying a call option with a strike price somewhere in the high 6,000s or 7,000 area. And just, that way you've got some, a foot in the door, but you're not over leveraged and you're not, because this is a very dangerous time. As far as like my investment accounts, I'm actually obscenely long treasuries. I'm way overweight treasuries, which hasn't really worked that well yet. Like we haven't gotten a whole lot of price appreciation, but yielding like 4.5% to 5% every month has not been too bad without really any stress. And I know there's a lot of people out there that think it's a dangerous place to be because maybe the U.S. defaults or maybe inflation pushes rates up. But um, I think we're so late in that cycle. I think all of that's already been built in. And when I look at like the short interest on the futures, like there's massive short positions in 10-year note futures. And that's been the case for a couple years. And it hasn't mattered, but I think eventually it's going to matter. I think we're getting to the point where the administration has said they want interest rates lower and they're willing to kind of go outside the color outside the lines to get what they want. And so I'm hoping that that's what happens. And in the meantime, 4.5, 5% is not too bad to wait. So that's how I'm positioned. I would love to be much more aggressive in equities, but I'm waiting for, um, I hope I'm wrong. I don't want the equity market to correct in a massive way, but I think it's very possible that it does. Midterm years are usually kind of rocky. So I think, and also if you think about Trump's last term in office, he was good. Like overall, the market did really well when he was in office, but there were some really big corrections, kind of some really scary corrections. So I wouldn't mind seeing one of those so that I can get back and reallocate my portfolio, but we'll just have to see what happens.
I agree. And we had the correction here in 2018. And then of course we had the 2020 pandemic one. So these were pretty big,
They don't look so big now looking back
They don't
because the
look so big.
market's so overvalued, but they at the time they felt like the end of the world, right?
They did because they keep actually what I'm noticing here is that in 2018, like everything kind of shifted in the market and the bigger volatility came in because until then we did have volatility. And I agree. Remember the 2007, the 2008, but look at the size of the candles and the shapes of the candles and how dramatic they are in 2020 and in 2018. I think everything shifted here. We went from volatility to crazy volatility. And now we're going to insane volatility
I agree
when
with
we're
you
looking at the
100%.
markets.
I think
Yeah,
a lot of it's just the electronification of markets and people have access on
absolutely.
their cell phones. But I also think my theory is that around the pandemic in 2020, I think so much cash came into the system from political, basically money printing by the Fed and like
Yep.
handouts from the government, and there's just pushed the money supply so high that I think this is kind of the result of that.
I have to say this was really fun to trade.
Yeah, I enjoyed that time. I did myself as
This
well.
time here, we had to have a lot of patience, retest, and then here we had it was last year, Liberation Day.
Hmm.
It was basically a liberation kind of week, and then we rotated.
Yeah, you had to be real quick to jump that on
Real
as an
quick.
investor. You had to be real quick. Yeah.
Exactly. And again, here, if we're looking at the chart, I mean, come on, we're still above the 10 EMA.
Hmm.
We're still basing. I mean, nothing is, pretty much screaming, let's short this. I mean, until the market approves that we need to be short, I'm not going to short. So
Yeah,
I'm not going to be,
yeah, I don't blame you. It's
no.
super resilient. The problem is the markets move so fast now.
Mhm.
It just happens. There's not much of a warning
Oh,
it's
no.
pretty quick. Yeah.
Absolutely. Okay, Alaina,
Yeah.
what do you think? Day trading, is it a better environment to day trade or to swing trade?
So I think I'm biased on this, but I love day trading. I love security
Hmm.
profit while the market is open. I do believe though, if you've got like a strong and even still, like there's just so many things happening right now, and that makes me hesitant to swing. So that being said though, if there's something that has like a strong catalyst, the chart can back it up, I'm all for the swing trade. But I just think right now the fundamentals have to be there because there's just so much uncertainty. And even like if I'm okay with spreads. If you want to hold something longer and hedge a little bit, I'm cool with that too. But yeah, there's so much up in the air. And I agree what you guys were saying too. I had a live earlier and I was telling my students like, yeah, I don't know that we stay red too long because we have a president that does not like a red market. And then I was also saying that the dip buyers they're super aggressive. Like they're very aggressive. And then here we are. So yeah, I totally agree. Markets are moving a lot faster. And it's interesting. I've only been trading since 2020, so this is new territory for me. But it's very interesting to watch. And like Anka, you mentioned earlier,
Hmm.
observing. I love it. I love to sit back and observe and just see what I'm dealing with. And that's
I
not
know,
something I
me
was,
too. Yeah.
yeah, that's not something I was able to do when I was a new trader.
Yeah, I love confirmation. So
Yeah,
I let the price lead the way. I don't want to be the one deciding long or short. I want the market to show me what it really wants.
yeah, for sure.
Yeah. So I day trade Monday through Friday. So
Mhm.
I trade the power hour, and I have to say today we were looking at the market. I think all of my members thought, "Oh my gosh, she's crazy." And I said, we're gonna go long. Okay, so and this happened, I think, in the first like 20 minutes or so. And we waited for 10 o'clock. I just wanted to see if we have more information. The candles were super wide. This is again a problem that day traders have because the um, setups are so wide. And if there is a trader that doesn't position size, they could get in like in serious trouble because it's one thing to risk, let's say 20 points, another thing to risk 130 points, for example, in NASDAQ or anything like that. So today I saw this synchronicity, the reason why I went long because it was so interesting that we had visits to the 200 simple moving average in absolutely all the indices. And in the back of my mind was, okay, so the market held up a little bit in the overnight. And when we actually started the session, we looked at the 1 hour and oops, sorry about that. And we were actually trading here. And I'm like, wow, the market is really trying to hold.
Mhm.
And this is actually like a really good sign because we had a little bit of red here. The price action didn't get rejected back to the downside. And at the open, at the New York trading session open, we've been holding for about 4 hours. And I'm like, the market is really, if it really wanted to sell off, it really didn't hold here. And we had a lot of indecision bars. We were again, with our backs against the wall because we were into resistance from this pivot low. But then I'm like, no, we're gonna go full throttle. We're gonna go in, and I got in at a little bit of a higher price. I got in like I think it was 440, and then like here, and then the market went lower, and then I don't usually add. But we had a very small risk and we could position size a lot better here. So I said, you know what? Let's add. And then we rolled back up. And then we exited. It was around 11 or something like that. We exited. So we actually made some really good money. Our target was 600. So it was actually interesting to see that, the market still works on
Yeah.
technicals, right? So it wasn't just, panic selling or anything like that. But I think it's easier right now, from my point of view, to day trade than to swing trade because we have these very rapid moves. And even if we put like really wide stops in swings, not unless you're doing options like you probably Alaina are doing or Carley's
Mhm.
doing, I find it really difficult because you need to give a lot of room, like more room, almost like half the size, double the stop type of theory in order to stay alive. And even if we applied that, we could still get stopped out and then the price is going to move back up. So I'm just going to be very reserved into day trading. Of course, the indices are not going to be on my swing trading menu anytime soon. But other than that, I'm just going to focus a little bit more on the day trading spectrum until the market like comes down a little bit. So that's my take on day trading, swing trading type of thing. So I'm going to switch to the next question, which is again also about the market. So if you were to place, let's say, a trade today or tomorrow morning when the market opens, which market do you think is going to perform better? Do you think or which sector, let's say the tech sector, or even, let's say, commodities or small caps? What do you think that can potentially have the tendency to move a little bit better into tomorrow, let's say? Carley? Sorry.
Well,
Go ahead.
no, you're fine. I mean, honestly, my charts are so messy. The only thing that I would feel comfortable even at saying, you know, go long for a day or two would be 10-year note
Mhm.
futures, maybe 30-year bond futures if you want to take a little heat. The great thing about those markets is you can go long futures and buy puts against them. So there's puts that expire a couple times a week, and that way you don't have to worry about your stop. Because I agree, like as a broker, I
Yep.
see it a lot. People get stopped out, and then the market goes their way, and it's because you're kind of it's tough, right? If your stop is too tight, you're going
Yeah.
to get stopped out all the time, and your little losses add up to big losses. If you don't
Hmm.
place a stop, you're going to be in the wrong place at the wrong time sometimes. One way to get around that is if you, it depends on the market. It's not appropriate for all markets, but in like a market like the 10-year note, you can buy a future and you can buy a put for pretty cheap, a little out of the money, a couple $100 maybe. And that way you have limited risk, but you also have lasting power. So you don't have to worry about getting stopped out. If the market drops, you're going to lose a little money, but it's backstopped by your long put. And eventually, if the market comes back, you're still in the trade. So that would be my
Yeah.
idea.
Yeah, I agree. Alaina, what do you think?
Probably, I'd probably go semiconductors. They got beat up pretty bad last week.
Hmm.
And
Yep.
they got a really nice push. So like, um, even like the two, I think it was like like Light and COHR that Nvidia invested in, like they got obliterated after that investment was announced. And then today, they just kind of reacted finally, I think, and then they just got lifted with the rest of the market. But you also have like LRCX was really well today. What's the ticker? I think it's AMAT. Just a lot of them had some really beautiful recoveries,
Hmm.
and they were beaten to an absolute pulp.
Yep. Even at MU.
Yeah, oh yeah,
Yeah. So there's a lot of
Broadcom.
interest going back in here.
Yeah, for now, we'll see we'll see how the week
Yeah.
goes.
Today
Yeah.
there is some interest. And I think also that AMD is pretty interesting at this point
Oh
because we
yeah.
have like this massive level of support, like you said, like semiconductors. Let's keep an eye on these, okay?
Yeah.
Because they could start running. So it's very hard to predict where the money is going to go next. I mean, we can look at volume, we could look at, what has happened within the last week, what has happened within the prior day where money is shifting, but it's really hard to actually nail what's going to move next because
Yeah.
of the market environment. And I think we have to literally, tippy toe around the market. It's not going to be easy. It's going to be a crazy week. I think next week is going to be a crazy week as well. So we'll see. We're going to take it one step at a time. As traders, we need to have patience. So this is key. All right. I'm gonna ask a really interesting question. If you had $1,000 to deploy in the market today, where would you put it? But this is like not short term, but this is a little bit longer term. Okay, it could be a stock or it could be an ETF. Carly?
Ooh, that's a doozy of a question.
Okay.
Um, $1,000. Here's what I would do.
Okay.
Okay.
$10,000.
Oh, 10,000. Okay.
10,000.
That's
Yes.
more realistic. I was gonna say 1,000. That's gonna be really, really tough. All right, 10,000.
What stock would you get?
Um, Honestly, I mean, it's outside my wheelhouse to try to pick individual stocks. So I'm gonna just say this, and this is a little outside your not exactly answering your questions, but as a
Okay.
speculative play, not an investment, and a speculative play, I would buy crude oil puts with a lot of time to go. December puts, something like that. Because I feel like everyone's got hyped up on the rally here. And honestly, I think if you take out the war, I think crude probably would be trading in the 40s. So at some point, it probably won't be right away. Like I've said earlier in this discussion, we might even retest the highs from overnight. That's not impossible. But at some point, we were oversupplied before this situation, and we're probably going to be even more oversupplied after because, um, I mean, I know it's kind of a long shot, but if everything in Iran goes the way the president wants it to go, we actually end up with more oil, not less. So we'll see. I'm not saying that's a foregone conclusion. It's a long shot, but it could happen. And I've seen crude oil, if you notice the last time, well, you can't see it on your chart, but in 2022, when crude oil behaved like this and we had this massive run, look what it did afterwards. It hovered around for a couple months, but then once it started moving lower, it did it pretty quickly. So I think that's probably what the scenario we're looking at.
Absolutely. I love this idea. And I agree with Venezuela and Iran. And once everything is going to be all set, I don't think that oil can sit into these levels for a really long time. In fact, even if we look today, and again, like Carley said, I don't think that, we're going to retest a lot higher. But it's a possibility. But I love your idea, Carley. Love it.
Thank you.
All right. So, Alaina, what do you think? If you had $10,000, where would you put it? Like a little bit long term, thinking
Yeah.
outside the box. Like,
So can I give you two answers? Because the first one
yes,
is SpaceX,
absolutely.
but they're not
Yes.
even
Now let
public
me know if
yet.
you want to share a chart. Yeah,
Yeah, the first one would be SpaceX, but they're not IPO'd yet, so that's off the table. But probably
gotcha.
Microsoft. I would probably do Microsoft just because they've been beaten up pretty badly with the rest of the software stocks. And I think Microsoft, hopefully OpenAI can become profitable at some point. And if that happens,
Mhm.
I think Microsoft stands to really benefit from that.
Oh, I agree. All right, I guess it's my turn. Okay, I'm gonna go with Broadcom. And Broadcom, I definitely see it higher into the end of the year. I think it has had a really good response last week, today as well. It has been, curling around for quite some time around the 200 SMA. It reported earnings. Earnings are good. And if I was to have to put $10,000 in a stock for the end of the year, it would be Broadcom. So it also offers really good dividend. So there are many reasons why I would choose this one, but I really like it. Okay, so looking at the time right now, we still have a little bit of time. Okay, so let's
On
see.
on the
Yeah.
oil idea, Carly, when you said that, I looked up, some puts far out, and it looks like a few people put some major bets on oil puts, USO puts in October, uh,
Okay.
today and December and
Oh,
January.
really?
So yeah, so yeah, it looks like
Worth
a
a
few
shot.
other people have that idea too. So I just thought I'd mention that.
I love that, David. Thank you. And it just makes so much sense. It just makes so much sense. But yeah, so let's take a quick look at the VIX and see where we're at. Okay, so I'm gonna try to squeeze it in here. Okay, to see where we're at. So this is where we are right now. So we are into the peak of November 2025, October 2025, March 2025. So basically it was a year ago when we were here at the same level in the VIX. And every single time when we came in here, so I'm just going to take this out because this is that Liberation Day or days. Okay. But we had these peaks right here. And every single time we tapped into this resistance, we definitely, calmed down. So things calmed down. So now this is going to be very interesting because I think that if we, break the 30, we could start definitely, ramping up towards these levels right here that we had in April. And also back in here, this was 2024. So what do you guys think about the VIX? Carley?
I mean, obviously, historically, the VIX generally tops out around 30. It's pretty rare for it to spike higher. So uh, betting on it going higher normally doesn't work. So you want to, obviously just keep that in mind. But it's worth noting that there's a lot of crazy things going on in the world, and anything could happen. So I don't know, just with everything, like the fact that it's midterm year, the fact that we've got oil spiking, I actually do think there's probably a little better chance now than maybe in a normal market that we do kind of pop up and trade above 30 in the VIX. Could be wrong, but I think we should be prepared for it. Again, I'm not saying liquidate all your stocks and move to the sidelines. I'm just saying, maybe don't hit the gas on everything. Maybe just kind of lightly tap on the gas if you want to be involved in equities.
I agree. I totally agree. Alina, what do you think?
Yeah, I think a lot of the rhetoric I've seen just today has been a lot. It's very much like maybe the war might be ramping down. And so it kind of is in line with the VIX here, kind of pulling back. But I also think there's so many, I don't know if you guys have noticed this, but like the 0 day, like there's so many people doing like 0 day and short-term options now. I just wonder if it's actually changed like how the VIX moves, just because it's based on those longer expirations. So like I think it's 30 days out. But yeah, I could totally see the VIX rejecting this level and pulling back and letting this market come up a little bit more, barring nothing insane happening overnight or anything.
Oh, absolutely. I still think it's such a dangerous market for a beginner, especially if you have not experienced volatility. This is a really wicked volatility that we're getting right now.
Hmm.
Yeah. Okay, I have one more question. What has been the hardest lesson the market has taught you as a trader or an investor? So, Carly, I'm going to start with you. Hardest lesson, because we're talking about volatility.
Sure. Well, it's hard for me to pick because I've had some pretty tough ones, but the I think my hardest lesson was my first lesson, and that was, I'm old enough to have lived through the financial crisis. And I recall, like, I was in my early 30s, I guess, for most of it. And, I thought I was doing all the right things, stuffing money into stock accounts, buying real estate. And my mindset was, I'm young, I don't have to worry about risk, it'll all just work out. But then the financial crisis came, and I realized that, um, risk comes very, very, very fast. And so I've probably, this has probably worked against me for the rest of my life because now I focus, like when I look at my investments and my assets, I focus on risk more than I should, and it causes me to leave money on the table. But at the same time, I don't lose any nights of sleep over how my stock portfolio is sitting, or my, at this point, treasury portfolio. So the only thing I could say is complacency kills. And I'm not saying, young people should be aggressive in the market. They should be investing. I want everyone to participate in markets. It's the greatest wealth builder we've ever known. But you also have to understand that, there's this kind of fallacy that I see very frequently, and I hear when I talk to retail traders, that markets always go up, so therefore, it's never going to be uncomfortable, and that's not the case. We've had an amazing run in the stock market. And there will be a time where we might see 5 to 10 years of sideways or negative returns. That happens every once in a while. And so we should always keep that in the back of our minds. I'm just going to say one more unpopular thing. If you want to know what happens to stock markets that get overheated, look at the Japanese Nikkei over the last 30 years. And I'm
Mhm.
not saying that's going to happen to us. I'm just saying keep that in mind. Like if you're allocating your portfolio and you're 100% stocks, you might want to think to yourself, can I stomach it? In the long run, if you've got 20, 30 years, you're probably going to be just fine no matter what happens. But the problem is most people panic when things start going south. And so even though their investing horizon is 10, 20 years, they often liquidate at the worst times, and then they're not there to enjoy the benefits of that longevity. So that's been my biggest lesson is just pay attention to risk and don't be complacent. And yeah,
I
that's it.
agree. Risk is so important, and allocating, just proper risk to our trading, to our swing trading, day trading, investing, etc. So, and we need to leave a little bit of room for the unexpected, I think. Okay, Alaina, what about you? What do you think? Is What is the hardest lesson the market has taught you as a trader?
Probably I would say the hardest thing is just because you can doesn't mean you should.
Mhm.
Knowing when to
Yeah.
take, knowing when to sit on your hands and knowing how to just stay calm and relaxed until your setup is there for you. Not trying, defense. I always say defense wins championships. A lot of
Mhm.
people wake up in the morning and they immediately go on the offensive. And so I think that's probably my biggest takeaway is that like for me personally, my portfolio appreciated me slowing down the frequency of my trades.
Yes.
So yeah, I think that's probably my biggest takeaway. More trades does not equal more money.
I totally agree with you guys. And because every time you put a new trade on and a new trade on and a new trade on, you just open the door to risk. And it's, the more you trade, the more you can lose. So if you have like a series of, pretty good consistent winners, then again, kind of like evaluate and see, am I going to take the next trade or am I going to risk, let's say my full R, or am I going to risk a portion of, let's say, the prior trade that where I won and, kind of like build from there. But I think one of the hardest, lessons the market has taught me, um, is that my opinion doesn't count. My analysis, yes, it's what I think it should happen. But the market doesn't care about this, and one of the greatest examples was today. Like, yes, we could have lines in the sand, on the chart, support, etc. But I always, when I trade it, I always emphasize like, let's not buy and support. Okay. Let's not sell into resistance because basically those are the last layers that are either going to blast the market higher or they're going to make the market, just push lower. And, like early on, I totally realized that being right is far less important than managing risk and protecting capital. That's what I
Absolutely.
thought. Yeah. And what really changed my trading was accepting the losses because they're part of our business and focusing instead on position sizing, discipline, execution. And once you leave that ego behind and out of the equation, then you respect risk more. And trading becomes a completely different ballgame because it's more structured, it's more organized. And I think that you become a better trader because of that. I think we have time for only one last question in here. So I can't believe like time is flying by so fast with you guys. So the next question is, what advice would you give to women who want to start trading but feel intimidated about the markets? Carly, I'm going to start with you.
Sure. So as if they're looking at speculating, the CME has done a really, really great job of offering bite-sized contracts. They actually just added a gold and a silver contract, like smaller than the micros. So there's super small futures contracts where you can. It's like a step above paper trading. Like you're actually trading real money, but you're probably not gonna do too much damage. You're not going to get rich either, but it's a way to kind of paper trade, but still have some skin in the game. So you get the full experience and the emotions that come with it and all those sorts of things. So I would suggest starting with micros, nanos, minis, futures. When you want to be real careful though, when I say mini futures, I'm
Yeah.
probably not mini S&P and mini Nasdaq they're actually have grown so big they're not that many anymore, right? They're the margins 20 something thousand for an S&P and it there's a lot of risk there. So for a new trader, you want to go to the micros for the stock indices, but stick with the small contracts and go from there.
I love that. I love that. And again, CME does a really great job, not only with that, but they have all these informative webinars that they have going on. So yeah, they're doing good. So Alaina, what do you think?
Yeah, I would just say pace yourself. I think a lot of times people come in the markets and they just smash the gas and they want to make all this money on
Mhm.
the first day or
Yep.
whatever. But yeah, just pace yourself, take your time, like find your rhythm and find your edge before you even go live. I'm very big on,
Mhm.
demo until you get your processes down. And then just size according to your account. And then also, like, this is something I talk about in Trade Brain, size according to your nervous system. Like if you can do 5 contracts comfortably, then stick with that. A lot of times people will try to go bigger and it throws them off mentally because they're managing more money than their nervous system can really handle. And so like when you trade, it really is a full body experience and you just want to make sure that you are tapped in with yourself enough to know like, okay, I'm getting anxiety, I'm getting overwhelmed, or I'm getting a little, whatever it is, just making sure you're protecting your money from yourself. That's like the biggest thing.
I so agree. And when I think of women, starting or approaching the market, I would say, don't be intimidated because, we're women. We just had to start somewhere. And I think that this is such an important skill and it could truly change your financial future. And if you learn, it'll change it for the good. And the markets feel and may seem really complex. When I first started trading, I remember it was like, yeah, support resistance, that's easy. But then again, like every day is a different day. Every day you have a different market environment. And I remember when back in the day when my mentor, we were talking and he said, "Oh, I'm so proud of you. Like you're doing so good. Like you're not bleeding money. Like you're handling the market really well." And I'm like, "Phew, I know I'm really great," because I was making a little bit of money because I started very small with a very small size. And then at one point he said, "Oh yeah, you're doing good, but you're going to be a complete trader in about, let's say, 3 years." And I'm like, "What? Like I'm rocking right now. Like what else is there?" And then I realized, you have to go through the different cycles, like election cycle, or volatility cycle, and you don't know when the next volatility cycle is going to come. So you just gotta go through all these phases into the market before you actually consider yourself like a well-rounded trader. And discipline, support, structured strategy, discipline, are so important things, are really important things that new traders need to focus on. And like Alaina said, start with a demo account, start with a sim account, because first of all, you need to get really used to the platform that you're trading. So that's also a big issue because if you're in a trade, you push the buy button, you click a button and then you go like, "Oh my God, I don't know how to exit," or "I don't know how to trail. I don't know how to do this." So you have to get used to things that you think they're simple, but they're actually not. So and like Carley said, start small, start with nanos, micros, and focus on building that knowledge and that confidence in the market. And also, I think one of the most important things, because we're starting the big women teach trading event, is to have a supportive community of traders and have somebody that you can go to, ask questions is so important. And I think that trading is not about being perfect, but it's about, trying to do the same thing every day. If you have a good system, just repeat the system. You don't have to reinvent the wheel. And um, I think that women in general are really great traders, like really amazing traders.
Agreed.
And I think that we're a little bit more on the conservative side. I think we're a little bit more on we handle risk a lot better because we just don't go all in, you know. So yeah. All right. So I think this is almost a wrap up, but I'm gonna ask Carley and Alaina one question. Can you divulge what kind of presentation and what you will be talking about this week? And when is your spot?
Sure. So I'm talking tomorrow at noon Pacific time. So most of you are probably on the East Coast. That should be 3 p.m., I believe.
Yes, that's
And I,
correct.
yeah, okay, I wasn't sure if I was scheduled for noon or not, but that sounds right. Okay,
Yeah.
so noon Pacific. And I'm going to be, I'm not going to talk about specific trading strategies or give market calls, but what we're going to do is just look at some charts that I think are really telling and should be kind of monitored going forward so we can see if we are coming into the next volatility cycle. So far, we haven't. We've kind of been unscathed, but I think we may or may not be on a tipping point. So, for example, we're going to compare a chart. We're going to look at a chart that compares Bitcoin and the S&P and how they're normally correlated, but this particular cycle they haven't yet been correlated. In other words, the Bitcoin has sold off, but S&P hasn't followed like it has every other time. So we're just wondering if this is different, if this is showing some sort of strength in the S&P that we've never witnessed before, or if it's just an accident waiting to happen. So we're going to talk about those sorts of things.
Oh my gosh, this is so interesting. So don't miss it, guys. Alaina, what about you?
Yeah, so I'm going Wednesday at 4 Eastern, and I'm going to be going all in on Trade Brain. We're going to talk about some different things that, mental blocks that traders experience, how to break habit cycles, really just how to get to know yourself on, a molecular level so you can understand how to perform in these markets and when to intervene, things like that. So I'll be doing a full trading psychology presentation.
This is so amazing. And it's a good thing that David is recording everything because nobody wants to miss this. And I will be talking about futures. I will be talking about the power hour and basically demystify everything that is about the power hour because a lot of traders are staying away from the power hour because they consider it very dangerous. However, if you have the right structure, the right approach, you could actually, make a really good living into the just trading the first hour in the morning. And my spot is tomorrow at 11 a.m. Eastern. So I'm really excited about that.
Yep.
So, ladies, thank you so much for today. And I really can't wait to see you present this week and also looking forward to other presentations. I think there are 25 women that are hosting presentations. Is that right, David?
Uh, uh,
25?
about 20. 20.
20. Okay.
Yeah.
So we have 20 women present. That is just amazing.
I love it.
Yeah. Yeah.
All
I
right.
mean, we all know that this industry is kind of a boys' club, but um,
It's
but
true.
I remember when you and I first started talking about
Mhm.
doing this series together. Um, I was like, I don't know if the industry really needs another multi-speaker event series, but you had this
Mhm.
great idea of having themes to each event, and this is one of those themes. And the great thing about uh, the series in general is getting a lot of different perspectives on from different educators, and so this this one in particular allows people to get get perspectives from all of the best women educators from the industry. So
I
that's
agree because there are so many trading styles, and there's
yeah,
not a wrong style and a right style. There are so many styles, and I think this is just a great opportunity to find somebody that resonates with you and kind of clicks with you, and then investigate it further on to see if that's, kind of like your style or this is something that you can do or so you can follow. So
yeah.
that's so cool.
That's so important for trading to find something that you personally
Right.
can do on a regular basis and sustain. And there's so many different ways to do it that
Mhm.
eh, this this allows people to get a good handle on all the different options out there. So,
Right.
all right. So, all right. So, yeah, that's it for today. Again, join us tomorrow, uh, Tuesday, March 10th, as well as Wednesday and Thursday this month of this week, 10 a.m. Eastern Time. That's 7 a.m. Pacific until 5 p.m. Eastern Time or 2 p.m. Pacific. Again, on TimingResearch.com. Um, while the room is open, there will be links all over the site. So you can just come to TimingResearch.com and click right into the room. And um, yeah, so we have a great lineup for this event. And we had a great discussion today. thank you all for being here.
Thanks so much, David, for
Yeah,
putting this together.
yeah.
Thank you,
And
guys.
Thank you.
just a reminder, yeah, ever the entire 10 plus year history of timing research events, including this discussion and everything that we do this week, is permanently backed up to the timing research website and the timing research YouTube. So you can just search for timing research on YouTube and find that. Also, if you search for timing research on Substack or your favorite podcast app, you can find them there as well. And so I just want to thank my panel again for today. So Alaina and Nicole of investingbay.com, Carley Garner of decarleytrading.com, and Anka Metcalf of tradeoutloud.com. Thanks, everyone.
Thank you.
Thank you.